Hey guys, welcome back. So today we're going to continue our talks on forbearance. I know I've done a lot of videos on forbearance over the last couple of weeks, but at the same time I've promised you that I would keep you up to date with anything new that's released that would help guide you in that process. But before we do that, I'm Jeb Smith, real estate broker here in Orange County, California. I want to thank you for taking the time to watch. If you're new to my channel, do me a favor, hit that subscribe button if you're interested in real estate, finance, anything that's trending and related to housing. Again, my goal is to kind of keep you, or not kind of, but keep you informed of what's going on to help, make informed decisions going forward. And if you like the video, do me a favor and hit a thumbs up. So, today some information was released with regards to servicers that will help with the liquidity issue. But before I explain all of that, I want to talk about what a servicer is, because some of you may be new to this, and I want to help explain so that the rest of it makes sense. So a servicer is whoever you make your payment to each month. You may be your bank, it may be who did your loan originally, but regardless, whoever you make your payment to each month is who you should be contacting if you're interested in doing a forbearance. And so we've talked over the last couple of weeks, which I'll link to a video below, above here, where I talk in more detail about this process. But in layman's terms, the reason that servicers haven't really been working with borrowers with regards to the forbearance process is because of liquidity issues. So, we explained in that video that I mentioned that every time you make your payment to a servicer, that servicer turns around and makes a payment to the person that actually owns that loan. So every time you miss a payment, that servicer still has to turn around and make a payment to the bondholder that owns your loan. So that creates issues. And so it creates issues for those servicers because typically they don't have enough cash on hand to be able to float those payments and continue paying the servicer. So every time you miss a payment, that puts that bank in more of a financial hardship, right? Because they still have to make those payments to the person owning those loans. So in the videos in the past, I've said, why would a servicer work with you if, they still have to turn around and make payments? They want to structure your forbearance in as short a term as possible so that they can get some money coming back in so that the money going out to the bondholder is reduced, right? So if they give everybody a year of forbearance up front, which is required as part of the CARES Act, they wouldn't have payments coming in for a year, but they would still be required to pay that bondholder for that full year's worth of payments times however many loans they have in forbearance. And as of last week, I think 5.5% of all active loans were in some sort of forbearance process. So that's a lot of money not coming in to these different servicers that they're still required to pay out. So and so we've talked about, the servicers needing some liquidity, some sort of stimulus package coming from the federal government to back these guys so that they're more apt to provide you or whoever's calling the borrower with realistic forbearance options. Some of you have called and you've gotten a 3-month forbearance option and the full payment's due in the 4th month. That's not going to help you, right? Missing 6 months and having to come up with all 6 months plus the 7th month, and the 7th month isn't going to help you. But what is going to help you is being able to add those payments to the back of the loan, or restructuring your loan where you can add those payments across the board to be able to make up for that forbearance so that you don't have to come up with some lump sum. And the only way that was going to happen is if the federal government stepped in and said, hey, servicers, we're going to back you. We're not going to let you go under. Here's money to help you float those payments. That's not what they did. They changed it. So they did something that is going to help them, but it's structured a little bit different. So I'm going to grab some paper here and actually read it. So this article came from Housing Wire. So if you're interested in the actual article, you can go to housingwire.com and find the article. But basically what happened today is the FHFA, which is the Federal Housing Finance Agency, came out and said that, they are going to limit the number of payments servicers are required to make for any GSE. So that's a government-sponsored entity. So that's FHA loans, that's VA loans, that's Fannie Mae loans, that's Freddie Mac loans. So if you're unsure whether or not your loan is one of those, there's a link on the website or the description below that I'll put there where you can go check to see if your loan is a Fannie Mae loan. But you can also call your lender and ask them if your loan falls under the CARES Act as well, because if so, then these servicers are required to work with you. If it doesn't fall under one of these GSEs, or that you can still call and try to work out some sort of forbearance plan with your lender. Chances are they're going to want to work with you, because of everything that is going on and because of all the pressure on these guys to do so. Otherwise, there could be other things happening down the road with regards to lawsuits if these banks don't help. But basically, under the new policy, servicers will only be required to advance 4 months of missed payments for loans in forbearance. After that, the servicer is under no further obligation to advance scheduled payments. What that means is, after 4 months of you missing payments, it makes no difference to that lender, in layman's terms, right? Because they've already paid your 4 payments to the person owning the loan. If you missed 5, 6, 7, 8, 9 months payments, they no longer have to pay that GSE for your missed payments. So if you're one of those people that have reached out to me and said, hey, look, I've gotten a 6-month forbearance, and they said, hey, call back in 6 months, we're going to re-look at your loan and at that point decide how we're going to proceed. Chances are at this point they would extend your forbearance because there's nothing lost on their end, right? They are still going, you're still going to be missing payments, but they're no longer required to send payments off to the actual bondholder, to the mortgage-backed security owner of that loan. That's huge because they're no longer having to float that cash, and that puts the servicer in a better position to work with you, right? Because now they're no longer worried about finances. This also gives them an opportunity to look at their book, see the loans in forbearance, add up all the potential missed payments over those 4-month period, and actually see where they're going to be at the end of this. Versus right now, if they give you 3 months, this guy 6 months, this guy a year, this guy whatever, they had no idea financially how many payments they would be continuing to make without coming in. So now it gives them some sort of structure as to how this is going to play out, which again puts them in a better position to work with you. But I'm going to read some more here. So this policy applies to all GSE servicers, whether they are banks or non-banks. Now, currently, what happens with Fannie Mae servicers, I'll read it. When a mortgage loan is in a mortgage-backed security, an MBS, Fannie Mae servicers with a scheduled payment remittance are responsible for advancing the principal and interest payments regardless of borrower payments. So that's what I talked about earlier. So they're still required to advance those payments whether or not you're paying. Well, today's instruction establishes a 4-month advanced obligation limit for Fannie Mae scheduled servicing for loans. That's what I talked about there. So in addition to that, the FHFA is also changing the GSE's policies around buying delinquent loans out of mortgage-backed securities. Under the new GSE's current policies, mortgages that are delinquent for more than 4 months are purchased out of MBS pools by the GSEs. But under the new policy, the GSEs will keep loans in forbearance in their respective MBS pools for at least the duration of the forbearance plan. So they're going to buy those loans out of the pools so that the servicers don't have to worry about the missed payments, and they're going to keep them in that forbearance plan until the end. So, they're going to give you an opportunity to work through the forbearance to be able to come out the end of it and schedule payments. Again, this is really big stuff. So this clarifies that mortgage loans with COVID-19 payment forbearance shall be treated like a natural disaster event and will remain in the MBS pool. They also say that they'll continue to monitor the impact of the coronavirus national emergency on the housing finance market and want to update their policies as necessary. So basically what they're saying is that they're going to continue to monitor this thing and try to work with borrowers. They see that servicers aren't able to continue under the current guidelines and are trying to structure something to help. So hopefully this will put lenders more on the same page and what you're being offered more similar across the board versus some banks offering one thing, another bank offering something else. So, they should at least be giving you, 4 months at this point in forbearance, but anything after 4 months shouldn't really matter to the servicer. They should be able to grant it if you call up and ask for it because again, they're no longer having to float those payments. And, you know, you shouldn't really have to provide any additional documentation to do that, at least at this time. So, you know, as I've promised, I will continue to update you as this information comes out. This can be very confusing for those of you who don't truly understand what's going on. So if you have questions, do me a favor, comment below. I'm happy to help. But basically what this video is about is that these lenders should now be more apt to work with you in extending your forbearance options, giving you better options, longer term options, since they're no longer required to front those payments. So I appreciate you taking the time to watch. Again, if you need further clarification, do me a favor and comment below. I appreciate you taking the time, and we will see you again soon. Have an awesome day. Bye-bye.